DC has realized this is a massive voter base in the US. And that's what's really started to make it a bipartisan issue. There's 52 million Americans who've used crypto. We helped fund this C4 called standwithcrypto.org. And they've now had 1.1 million Americans, voters, raise their hand and say, we really care about this issue. We want to elect pro-crypto candidates. That's gotten a lot of people's attention in DC. In some of the early primary races, there were some anti-crypto candidates that were expected to win and they lost, right? And I know that got a lot of people's attention in DC. It's really the voters that are in a democracy that are going to elect candidates which represent their values. And I think DC is waking up to that.
Coinbase CEO Brian Armstrong has highlighted the escalating significance of the cryptocurrency industry in American politics, stressing its bipartisan appeal to both Democrats and Republicans. Speaking at the State of Crypto Summit alongside Kathy Wood from ARK Invest, Armstrong underscored that crypto has evolved into a critical issue that could sway outcomes in the upcoming presidential elections. He emphasized the industry's growing influence on the political landscape, noting that lawmakers from both sides are now compelled to engage with its regulatory and consumer protection concerns. Armstrong revealed ongoing efforts by himself and other crypto executives to meet with senators and House representatives from both parties in Washington. These discussions aim to establish coherent regulatory frameworks for cryptocurrencies, aiming for clarity and consistency in oversight. The recent passage of the Financial Innovation and Technology for the 21st Century Act by the House of Representatives marks a step towards achieving these goals, delineating regulatory responsibilities between the CFTC and SEC based on blockchain network characteristics. At the Senate Appropriations Committee session, SEC Chair Gary Gensler and CFTC Chair Rostin Behnam clarified their agencies' roles in overseeing cryptocurrencies, ensuring lawmakers of their agencies' preparedness for effective regulation. Armstrong and Wood discussed these developments, foreseeing transformative times ahead for crypto and digital assets in the United States. Their conversation also touched upon the potential impact of spot Bitcoin ETFs and the increasing institutional interest in the cryptocurrency sector.
Stop, you don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Well, in the US, probably the biggest obstacle is regulatory clarity.
Definitely.
Unfortunately, the US is a little behind on this. Europe has already passed comprehensive crypto legislation. We've seen most of the G20 is actually already drafting or has implemented crypto legislation, and so there's broadly this recognition that this technology is here to stay. It has incredible innovative potential. We need to make sure we prevent consumer harm, things that happened with other companies and everyone's aware of. And so the US, I just got back from DC, a couple days in DC. I met with 12 or 13 different members of the Senate. The Senate is very eager to move on legislation now after the House passed the FIT 21 bill, the market structure bill, with strong bipartisan support. More than 2/3 of the House voted for it. And so the Senate now has a couple of bills being drafted that are hopefully going to turn this into law, whether it's in this Congress later this year or the next Congress. So we've got a lot of work to do there, and it's important that America gets this right. In the absence of that clarity, I probably don't have to tell all of you, there has been a bit of this turf war between the CFTC and the SEC, the two federal regulators. Are these commodities? Are they securities? Our point of view is that the tokens, underlying assets are commodities. There could be an investment contract or something like that on top of it that is an actual security. Like if a company is going to raise money, that's a security. There should be a path to register those, broker-dealers that can trade them. And we'd like to work with the SEC to make that happen as well. But if we don't have Congress step in and act, the lack of clarity is just going to be weaponized and not allow the industry to thrive onshore.
And how about obstacles then in the rest of the world? Mm-hmm. What do you see? Is there a quicker take-up or embracing of this technology and these commodities around the world?
Well, there's about 10 markets around the world where Coinbase has set up local operations, and each of those has a slightly different story, right? Just to give you broad strokes. I mean, it's funny, in the UK and in Singapore, for instance, they don't have this issue that we have in the US of having a separate commodities and securities regulator. They just have one regulator. So for instance, the FCA in the UK, this is a total non-issue. The question about commodities and securities, it never comes up because they just have one federal regulator, so it's not politicized, right? And similarly in Singapore, that's the same issue. So each country has slightly different moments in time, like Rishi Sunak in the UK was incredibly pro-crypto, and that government is now probably changing over. So we have to sort of, at any given moment, there's somewhere in the world where we see a big opportunity. You know, President Milei coming in Argentina, for instance, has been super pro-crypto, right? So we just, in the global landscape, we sort of see who's in office, who's going to lean in and work with us. We grow our business there, and then when the guards change, you know, in who's in office, we get an opportunity a few years later, and we grow it there. So we have a very long-term point of view on this. Whether it happens in any given year or decade in a certain country, we know the trend is clear long-term. Yeah, I mean, we've actually helped invite a bunch of founders to go to DC. You know, many of these representatives, they haven't really ever met someone in the crypto space, right? And they don't realize that, for instance, in Ohio, there's dozens of crypto entrepreneurs trying to build things in their state. And there's sort of, it's just like anything, you know, it's a relationship. Relationships matter, right? If you're just seeing something on the internet, you don't really know if it's real. These founders are incredibly compelling in person to go meet with the representative and say, you know, I care about this, and I'm in your district, and this is an important issue to me. We got to get this fixed, and there's just no substitute for that. So crypto is finally getting organized politically, yeah. And it's such a massive constituent of customers, shareholders, employees. They deserve to have their views represented in our government. If you haven't signed up, sign up at standwithcrypto.org.
Lobbying funds are earmarked to support congressional candidates sympathetic to cryptocurrency interests in upcoming state primaries. Prior to Coinbase, Ripple, and Andreessen Horowitz's $25 million donation to Fairshake PAC, developers of Solana's Fire Dancer contributed $10 million to AU's campaign Super PAC. According to a recent report by Public Citizen, advocacy groups like Fairshake PAC, aligned with the digital assets sector, rank among the top contributors to super PACs leading up to the 2024 election. Fairshake PAC, having raised substantial funds, including over $1.3 million for campaigning against Kate Porter, known for her stringent stance on cryptocurrencies, has accumulated nearly $169 million in lobbying resources. Key figures involved in shaping legislation like FIT21, such as Representatives Dusty Johnson and Josh Gottheimer, have each received significant campaign contributions totaling $122,000 from Fairshake. During his discussion with Wood, Armstrong also touched on topics including spot Bitcoin ETFs and the increasing institutional involvement in Bitcoin and other digital assets.
During the discussion with Wood, Armstrong also
Well, I think you're correct that retail did jump into this space a little sooner over the last decade. But I'd say in just the last year or two, we've seen an incredible amount of institutional adoption, and I feel like institutions are fully in it at this point. Really? I mean, we released some stats in this State of Crypto report that showed 56% of the Fortune 500 executives report their company is working on something on-chain in crypto, right? And so it's the biggest companies in the world. You know, BlackRock is helping tokenize real-world assets. You know, JP Morgan has an on-chain project called Onyx. You know, Google Cloud is accepting crypto payments, St. Jude's Hospital, and then, you know, fintechs like Stripe and PayPal, they're adding stablecoin support. So 56% of the Fortune 500 is doing something. I think this is really here to stay. It's already happening amongst institutions. And, you know, Coinbase can play a big role there too. Our Coinbase Prime product is the most successful in the institutional space, and we've got about a third of the top 100 hedge funds, our clients. A lot of them are also looking for that regulatory clarity moment, and I think when I talk to the institutional investors, often they'll say, you know, once we feel like there's regulatory clarity, which will not be some moment in time, it's a gradual trend that's happening. They're like, that's what would cause us to put 5-10% of our portfolio in instead of a couple of percent.
So that's interesting, our different perceptions, because having just launched the spot Bitcoin ETF, what we've seen is none of the major platforms have approved it yet. So the flows we've seen, and they've been great, have either been just from retail or they've been donated by Grayscale. A lot of it was donated by Grayscale, but we're still waiting for an approval, even from the platforms that do tend to approve new, interesting, different financial instruments. They're waiting, and maybe all this is we need one, and then there'll be a very rapid adoption, because competitively it's going to be very important to have this new asset class, we believe, on platforms.
Yeah, I agree with you on that. I think you could argue we haven't really seen the real inflows happen even in ETFs, and they've already been really good. I mean, from the numbers I've seen, there's far more demand in ETFs than is being mined every day from Bitcoin, for instance, which is a positive indicator. But you're right. I think Morgan Stanley, UBS, some of these firms, they haven't really enabled the ETFs where we'll see even larger inflows in the future potentially. I don't know why that is, but the ETFs were actually is an area where we did get regulatory clarity. So this will happen in bits and pieces, and I think it's an incredible first step. Each institution is different, but for instance, banks pay enormous fees to SWIFT. They don't feel that it's a very efficient system. Now, the process there's a lot of inertia, right? There's a lot of people in the United States who still pay their rent every month with a paper check. Yeah. So sometimes these changes take a little while. It's a demographic shift too, right? It's a generational thing that we're seeing. But there's a whole group of young people who are growing up today where, they're never going to have a bank account in the traditional sense with like a branch on the corner and a checkbook. Their phone is their wallet. They just want to have a primary financial account where they get paid and they can pay for things and they can just transact in a global economy. And I think increasingly they're going to use things like, there's mobile money apps, but I think crypto is a way for this younger generation to participate in something that they perceive as being more fair, more free, more global.
During the discussion with Wood, as well as in a recent interview with CNBC.
During discussions with Cathie Wood and in a recent CNBC interview, Armstrong emphasized the transformative potential of digital payment systems in modernizing the outdated banking industry. He announced Coinbase's upcoming rollout of new features aimed at encouraging customers to use the platform as their primary financial account instead of traditional banks. Armstrong clarified that while Coinbase does not intend to become a bank, they aim to offer comprehensive financial services akin to traditional banking, without the fractional reserve model and its regulatory implications. In his CNBC interview, Armstrong highlighted the trend towards digital money adoption, envisioning a future where mobile phones serve as people's primary financial tools. He noted increasing crypto adoption among major players in traditional finance, suggesting promising prospects for the digital assets industry in the years ahead. Feel free to share your thoughts on Armstrong's interview and his outlook for the digital assets industry in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.